3% on delivery commission. This is extra commission payable by the consignor to consignee. When this commission is paid, if there is any bad debt loss, that should be bear by consignee, not by consignor. 93,400 is the expenses met by consignee on behalf of the consignor. When you make the credit sale, if there is any bad debt loss occur, that loss should bear by consignee, not by consignor. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Grade College, a Temple of Excellence, MYSURU. In this session, I am going to hand Financial Accounting 1, First Semester Unit 3, Session 2, in favor of accounting for consignment transaction. This is important. This is a major question which is going to ask for 15 marks. We'll move on to problem now. Amco Battery Limited, Bangalore, consigned 1,500 batteries costing rupees 5,000 each, invoiced to Manju Electronic, Bangalore at cost plus 25%. The consignor paid rupees 75,000 towards freight and 30,000 for insurance. During transit, it was found that 10 batteries were damaged and insurance company settled the claim for rupees 45,000. Manju Electrical received the balance of consigned good and paid unloading and clearing charges 14,900. They accept the bill drawn for 3 months for rupees 20 lakh. As an advance, Manju Electrical sold 800 battery for cash at rupees 6,500 each and 450 batteries on rupees 7,000 each. They spent rupees 42,000 for golden rate, 6,500 for advertising and 30,000 as salesman salary. The consignee get ordinary commission, 5% on all sale, 2% on deliquestion. So you have to prepare consignment account, then consignee account, and goods sent on consignment account, and abnormal accidental loss account. We'll move on. Amco batteries. Bangalore, is the consignor owner. Then Manju Electronics is the Bangalore is the consignee. The relation between consignor and consignee is called consignment account agreement. So, goods is sending from Mangalore to Mangalore. Mangalore is the owner place, whereas Mangalore is the consignee place. Now, come back here. How many batteries has lost? 10 batteries. Consignment account in the books of concern Amco battery, working note number 1, calculation of invoice price. What's the cost price? 5,000. It has been sent at a profit of profit plus 10%. At cost plus 10. At cost plus 10% means 25 by 125 is 5,000. 1,000 rupees. It becomes 6,000 invoice price. Then calculation of abnormal loss. How many batteries lost? 10 battery. Cost damage of batteries 10 into 5,000. It is with the consignor, not a treat to consignee. We have to take the 5,000. It becomes 50,000. And only non-recurring expenses, indirect expense of the consignor. 70,000, 75,000 is the freight. 30,000 insurance. 1,05,000 divided by 1,500. We want for 10 batteries 700. It becomes 50,700. How much recover from insurance company? 45,000. How much is irrecoverable? 5,700, which is considered as abnormal loss. We'll repeat. Each battery cost 5,000 into 10, 50,000. Add proportionate expenses 700. It becomes 50,700. Recovered from insurance company 45,000. How much you could not recover? 5,700, which is considered as abnormal loss. Now, how much reach to consignee? You have to find out. You send how many units? Battery 1,500. How many battery loss? 10. Balance 1,490. How many batteries sold? 1,250. How many batteries unsold? 240. This is units. Find out the value. Now you have to take the what's called value of the expenditure of the consignor as well as the consignee. Cost of 240 batteries, 240 into 6,000, 14,40,000 is the cost price. Add non-recurring expense of the consignor, 1,05,000 for 1,500 factory. You want for 240, it is 16,800. Add non-recurring expense of the consignee, unloading, 14,900 divided by 1,490 to 240. It works out 2,400. The total expenditure is 14,59,200. This is the value of the closing stock. We'll move on. Sale. So he says in the problem here, they made balance. They accept the bill. This is nothing but advance. Manju Electric sold 800 batteries at rupees 6,500. 800 battery at rupees 6,500. It works out 52,000 on the cash sale. Come back to credit sale. Then cash sale. And 450 battery at rupees 7,000 each. Come back here. 450 battery at 7,000 each. It will work out 31,50,000. So totally 83,50,000 is the total sale. Then problem say 5% commission on all sale. What's the total? 83,50,000. On that 5% work out 4,17,500. And 3% on delivery commission. This is extra commission payable by the consignor to consignee. When this commission is paid, if there is any bad debt loss, that should be bear by consignee, not by consignor. Generally, the loss will be met by consignor. But when this commission is paid, the bad debt loss, when you make the credit sale, if there is any bad debt loss occur, that loss should bear by consignee, not by consignor. 31,50,000, 3%, 94,500. The total commission work out 5,12,000. Detail working out I am giving. Then come back here. Now format. Goods sent on consignment account. How many batteries? 1,500 battery. Each cost how much? 6,000. It will work out 90 lakh. Now, what are the expenditure of the consignor? One is the freight. Here you have to take all the expenditure. Freight 75,000, insurance 30,000, 1,05,000. This is the expenses of the consignor. Now, consignee will make the expenditure on behalf of the consignor. What are the Manju Electrical Sister consignee? What are the expenditure? Are golden rent 42,000, advertising 6,500, salesman salary 30,000, unloading charges 14,900, 93,400 is the expenses met by consignee on behalf of the consignor. Then we have to pay the commission to consignee is an expenditure consignor. Manju Electricals, commission 5,12,000. You work out already. See that? 5,12,000. Then come back here. Manju Electronic made a sales. He's already made the sale. 83,50,000. Then total loss, abnormal loss 50,700. Now closing stock, we already calculated closing stock here 14,59,200. Now goods as sold. When the invoice price is given, you have to calculate the stock reserve on goods sold. Actual cost is 5,000, but you are showing 6,000. How much more? 1,000 per unit. So 1,000 on how many units? 1,500. It works out 15,000. Then for closing stock also, you have to calculate the stock reserve. How many units excess is there? 1,000. How many unsold units? 240. It works out 2,40,000. When I add the figure, it becomes 1,13,59,900. If we bring out the difference, the profit to consignor 14,09,500. This is important. This you have to do it when invoice price is given. This you have to do when the invoice price is given. One stock reserve on goods sent here, stock reserve here, closing stock here, stock reserve here. How it is? Goods sent on the debit side, stock reserve on the credit side. Closing stock on the credit side, stock reserve on the debit side, opposite side. Consignee account, when you make the sale, it is 83,50,000 lies with the consignee. What consignee will do? He'll deduct the advance given by consignee, expense of the consignee, the commission of the consignee, the balance amount sent by check to consignee to God. Check sent. Who sent this? Consignee to consignor. So what is the total sale? 83,50,000. Deduct his advance, deduct his expenses, deduct his commission. Come back to last one, abnormal loss. The total loss is 50,700. How much insurance company pays? 45,000. How much could not be recovered? Transfer to profit and loss account, 5,700. Last one. Goods sent on consignment account. By consignment account at invoice price 90 lakh. Out of that stock reserve is 15 lakh. Really enter into trading account 75 lakh. This you have to do when the goods are sent on invoice price. What is the total invoice price? 90 lakh. How much stock reserve? 15 lakh. Really entered to the what's called business is 75 lakh. Hope I have gone with the detail. Entire detail all have been worked out here, and see that these problems will be looked after from the examination point of view. Hope we'll meet in next session with another problem. Till then, goodbye. Meet in the next class.